So, as you can see, this half of the day is all around decarbonization of all kinds. So, we're talking today about how can investors identify the risks that are associated with the transitions that need to happen in their properties. Mm-hmm. So, actually the first one we haven't heard from yet is Stephan. So this is Stephan de Bie, if I say it correct?
Stephan de Bie,
Stephan de Bie, from Vesteda. They are a residential non-listed REIT, investing only in the Netherlands. So why don't you have told us that you've gone on a kind of recent journey to integrate sustainability into your portfolio from quite low, now you're quite impressive. So.
Yes, 4 years ago we were at the bottom in the GRESB, ranked last with 38 points or 36 points, and that was the wake-up call for us to be more sustainable. It wasn't that we weren't sustainable at all, it had to do with not filling the GRESB right, but also that we can improve in certain points. So we made clear goals, we act upon it, and that resulted last year in a second place in Netherlands and at the top 20% in GRESB worldwide. So that was an accomplishment where we want to stay in the top 20% as a goal for the coming period.
Yeah. So you've also said that your portfolio might be one of the older portfolios. The properties are, you said 29
Yeah, the
years
average majority is 29 years of our homes.
So how do you see this transition happening with the portfolio as such?
Well, for our transition, we really want to make a difference. So at the end, when we achieve our goals, and our goals are now monitored on energy labels mainly, is that by 2020, when we realized that goal, we really made a difference. So we don't sell any properties because of their energy performance only. We do sell some homes, but not only for the sustainability part. Yeah. And we have a budget for realizing our goal, and for the next 2 years we have still 1,400 homes, 1,500 homes, and we have a budget of nearly 40 million to do so.
Yeah. Now, Martin, you have this clear goal for net zero. Mm-hmm. I want to understand, how do you see the market reacting to this goal? Are they embracing this, or do you feel pushback from places? And if so, which places are getting this pushback?
Yeah, it was very well received in this climate agreement talks last year. So it's even in the agreement that for the first years we will stick to the current legislative framework, so measures, labels, etc. And research now is started on whether to adopt this methodology for the 2050 targets, or 2030 even. So, some questions are still asked. I had a meeting this morning, because what we also said, it's important to know that we said it's the total energy consumption. So it's not only the building-related energy consumption, but also what's, let's say, the appliances in the building, to take this together. And some questions are asked whether, we can influence this, or some other things where people will rent more square meters to have a lower energy consumption per square meter. So some more guidance, or we have a data center in our building, or we have a parking garage, so more guidance is required in this methodology. Yeah. Of course, we want to keep it simple, because the current standard is 1,000 pages, so we don't want to write 1,000 pages, but some more guidance is required to withstand this criticism.
Yeah, and so I heard from both of you that EPC labels are still a large part of your measurements on this. Rick, I'm going to ask you, being a little bit more international, so on a local basis, I think that's okay because of some standardization, but how do you see that on an international scale?
Yeah, it's very challenging. So there are more EPC methodologies than there are European countries, actually way more. Yeah. So Belgium has 3 different EPC methodologies for different regions. Even here in the Netherlands, we measure it for newly built differently than for standing investments. So it is it's really challenging, I think, as an investor to use that. It's even challenging for us, GRESB, to collect data on that in a standardized way. So we really believe that eventually you have to go to more on operational side of things. Really look at how efficient is a building actually. And some EPCs labels actually look at that as well. But perhaps on some sort of building certification rating is, I assume, still necessary, as you run into issues such as how efficient, how intensive is the building used. Yeah. It's very difficult to account for that.
Opening hours,
So if you were to move toward an operationally based measurement system, could someone like Stephan participate in this? Because from what I understand, it's actually illegal to ask for tenant data in the residential sector here. So how would Vesteda view such a operationally based measuring system?
Well, we have the energy consumption of our tenants, in fact, and the CRREM tool would really help us. If you would also have residential in your research, but it really helps us to know where we are standing now on the road to Paris. And that is something that could help us do also that we know what our influence is. So a large part of the energy consumption is due to the tenant, but if we know what is our influence and what we can act on, then we can really focus on that part, and that would really help us with that data.
And so what I remember when I was working at GRESB, it was very often we could not get asset managers could not get the data. So what's your secret?
The regional grid operators can be your friend.
Good one.
Yeah, it's available on an aggregated level, so you can have it per street or per apartment building.
We provide the addresses to the regional grid operator, and we receive it back on aggregated level 5 or 10 minimum, and then you can see what the apartment building is actually using.
So for homes, it's doable because almost every house has a meter. We're also working on this for retail, so for a shopping center it's much more complicated.
Oh, okay.
So we have several shops, owners, meters, etc. So the access of data, the transparency, that's much more complicated.
So Rick, in your CRREM project, in your research, I want to understand what was your biggest surprise?
I think there are two kind of surprises in a way. One is just the lack of standardization in data. So there are lots of different carbon accounting methodologies. So everyone aligns with the greenhouse gas protocol, but it's very flexible in its approaching methods. So that's one issue which I think we can quite easily solve by providing more guidance and asking companies to stick with that. But another issue is just simply floor area. So there's no internationally applied standards for measuring floor area. And if you don't know what the denominator is for calculating an intensity value, then it's very difficult to make comparisons. I think one of the other interesting surprises is that the model uses a so-called conversion method. And so we expect that countries and property types will probably converge slowly towards a certain intensity value. But Sweden is actually so efficient already. The grid is so green that properties initially were allowed to emit more carbon over time, according to the model. And it's actually very interesting that when you talk with Swedish investors and property managers, that the risks that we are talking about aren't really that applicable to them. They think much more of the location of an asset, like how intensive is a building being used. You see that co-working spaces are actually also now getting more prominence because of a way to reduce carbon emissions.
Stephen, I want to talk also about your green bond that you issued this year. So 500 million in May, I think. How did you come to that 500 million for these renovations? So it was a green bond. It had to be 2 tiers up of energy label or A. Is that correct?
Yeah, that's correct. You have like eligible criteria. We had 2 criteria. The first one was the top 15% most sustainable buildings.
Okay.
And we did some research, and that are all the homes that have a energy label of A. And then when you have a significant improvement of your greenhouse gases, and that was by label standards a minimum of 2 label steps. So that were the criteria, and you can do a green bond for 2 types. The first one is to invest it in brownfields, brown sites, and improve it to a green site. We did it because we have done some improvement already.
Okay.
We did it in our existing green portfolio, and there was the 500 million spent on.
To refinance.
Yeah, refinance.
Okay, clear. So how could the CRREM tool, because what I understand is it can actually be used as a capital planning and a budgeting tool, not for residential, unfortunately, but Rick, do you see some kind of alternative possibilities to use this CRREM tool for financing?
Yes, one things we are researching is what are the costs for retrofitting.
Yeah.
But for us, that within the tool, that will be quite high level. So within an Excel tool, you can only do so much. Eventually, someone will have to go down to the property and really make a thorough assessment what will be the cost to make a building green again. Yeah. But as a starting point, yes, definitely.
Yeah. So how about, I know that affordability is a huge topic within the sustainable real estate sector in the Netherlands. How are social housing companies, how should they balance the transition of their properties versus maintaining affordability, because these require huge capital injections, so how can they balance it? Are they going to feel the pressure even more?
Yeah, they actually they are at the forefront now of this transition. So they are the starting engines, as it's called in the Netherlands, of this transitions, and it's done between housing associations and grid operators, especially for district heating grid operators. So that's where the transition from natural gas to all electric or sustainable sources will start. But there is, of course, the question is asked by the housing associations that they don't want to pay the price for being the, let's say, the innovator or being the first to start with this process. Yeah. And energy costs, and that's also, you see these changes in this climate agreement. Lots of funds and financing frameworks are now introduced to share the cost.
And Rick, GRESB also has a public disclosure assessment for listed REITs.
Yeah.
How does that assessment look at risk disclosure?
It doesn't really look that much at risk disclosure. Like, we look whether someone is aligned with TCFD.
Okay.
I don't have the most recent figures, but I have seen the Landsec's report, and that has, to me, always been an example. So if you want to look into a good TCFD report, I recommend looking at that.
Okay.
But yeah, just simply the disclosure of carbon emissions or energy emissions or energy consumption is something that is not done very thoroughly right now. In Europe, you see that's being done a lot better than in the US, and I think especially EPRA has a great sustainability framework that is really pushing this and is really a great standard that we see being rolled out. And I think more of that is needed, not just within Europe, but at the global level, as particularly listed equities investors don't limit themselves to Europe, but quite often take a more globalized approach.
So I'll come back to you, because speaking of global investors, I think, how should investors be looking at these transition risks? For countries that are pushing legislation farther than others, is there a real or a perceived transition risk that might deter global investors from coming into the Netherlands or for any other country for that matter?
Yeah, I've heard stories that Japanese investors would be afraid of investing here, but I'm not sure. It's hard to understand that.
Yeah.
But I guess the issue is, like, especially when it comes to physical risk, like how accurate is the data, how much is the government actually doing?
Yeah.
So like, that's that's important.
So Stephen, what do you think is going to be your biggest challenge in decarbonizing?
Well, there is at the moment a big discussion going on getting off the national gas grid, which is driven by the greenhouse gases and the climate agreement. So that will be a big task for the coming years.
Yeah.
You see that the natural gas grid, getting from it, is leading its own life. We are waiting now for the local municipalities to make a plan on how every area is going to be removed from the natural gas grid, and it's waiting now on that. But removal for gas grid have multiple options, and not every option is that CO2 efficient as it should be. So then you might have the wrong solution for it, and that's also a challenge about the expertise of the local municipalities. But further on, we as a real estate owner can improve the energy rating, the energy performance of buildings, which we are doing, and what is our task. And then you get also the affordability issue. Yeah. That is also a hot topic at the moment, but it's also affected by the sustainable investments.
Yeah, yeah. How do you see this happening? Do you really think that the sector will be successful?
Yeah, now we are at the start. So the first step, as I said, is that we want to provide awareness and provide the market with benchmark on where are we and what is our target, so that they will be able to develop long-term plans and to adopt these plans to what the local authorities will introduce on the transition from natural gas to other sources. So this long-term awareness, that's the starting point. Of course, we see the first projects coming to us that can be good practices for the rest of the market. And and it's good to hear that the CRREM project and others are working in the same direction. So that's the legislative framework is connected to what the market also think is a good indicator.
Yeah, sure.
Yeah.
Sure. And how is the Dutch government helping you in this?
Well, we are supported by the Dutch government, and so because they at the ministries, up to 2-3 years ago, they didn't have almost anyone working on, let's say, commercial and public buildings. They didn't have an understanding how the market works, and that's why they hired us and let's say the members of us. So we have an impact on what we think is a good approach.
Yeah. All right, well, I think I'll stop here and actually turn it over to the audience. So I know you have dying questions for Rick and Martin and Stephan, so you're welcome.
Yeah, I was wondering, Stephan, with the green bond, we spoke about it during lunch, but if you have that like two-step or energy label, jump, how do you actually control if it actually accounts to a decarbonization of those assets?
Yeah, that was my eye-opener on the green bond market, that it's much done on theoretical basis. I also had, they said in the framework you should have buildings that reduce greenhouse gas by 30% are eligible. So I first thought, well, don't do it on theoretical basis, but on actual basis. So we checked on researches how many actual energy and greenhouse gas savings are done by label steps. And then there was a local housing association in Amsterdam that had done label G to A, which on the theoretical basis was like 80% energy reduction, and on actual basis it was like 20%. So based on the actual, we couldn't even do a green bond, but the principles are made by the green bond principle. So we are focused on the theoretical one. I believe that if you look at our tenants, not that our tenants are not that sustainable, but they have more to spend than local housing tenants, they would set the thermostat on 21 degrees when they have a more sustainable home, because they thought, well, it's now sustainable, now I can put on the heat, it's more comfortable, and then the energy saving will be even less than 20%. So we did it on theoretical basis, purely on to make it transparent for the whole world, and energy labels are a widely used mechanism.
Is it possible to educate the tenants maybe when they get a retrofit?
Yeah, that is possible, but still I don't believe it's achievable, and with 2 steps, 30% energy reduction, also due to the fact that the energy consumption of tenants in residential is based on 60% by the tenant itself. So we have an influence of 40% of the total, roughly.
Bring you the mic first, 1 sec.
Thank you. I'm not too familiar with real estate in the Netherlands, but I wrote my master's thesis on real estate in Switzerland and carbon reduction. And we talked a lot about regulation, but one of the issues that that came up when I wrote my thesis in Switzerland was actually that when you want to reduce your emission of a building, you're facing quite a lot of regulation that provide you to reach certain sustainability levels. So my question is, do you see it as a trend that is coming, or that is necessary for the Dutch government to deregulate, so that the main challenge that you said, which is improving the energy rating of buildings, is actually achievable in a long term?
For now in residential, it's more attracting people to make more sustainable homes. So for the residential market, it's not yet really to be forced to do it, but I believe in the future it will be, because the Paris Agreement is there and we have to do more regulation. On other segments, as the offices, you see the stronger regulations already coming. That is that by 2023, an office that is lower than an energy label C cannot be rented. So they are now focusing on energy labels, but I can imagine, and I hope it will be much more on the actual data later on, which can be held by the CRREM report.
Actually, I have one question as well. So I read a statistic by the European Investment Bank that 52% of the Dutch office stock would need to be upgraded in energy label perspective to meet the 2023 legislation for this C label.
Yeah.
Do you think that's an accurate assessment? 52% of the buildings?
Well, it can even be more, I think.
Oh, wow.
No.
Okay.
Yeah.
Yeah.
Because usually only the best buildings have an energy certificate.
Okay. So some don't even have.
Yeah,
not
when you
even
know
rated.
your building is G labeled,
Yeah.
you don't have an incentive to have an audit.
Okay. Yeah. And Rick, how does that compare with the CRREM data?
I'm not specifically sure. Yeah, but it's a scary thought, I have to say, and probably a lot of these assets are owned by investors or managers or like smaller people that don't really have the capital to upgrade them.
No.
So it could be a huge financial risk.
Yes. One more. Let's bring the microphone to you first once again.
I have a question for Stephan. What about the pension funds investing in your fund? How do they think about this topic? And
well, I talked with our investments are like APG and the PGMs that worked together with the CRREM report, and we already discussed the report. And they think it's really important to know where their assets have already have capex reserved for the energy reduction, for retrofitting, and also where they stand now. So together with APG, I know they are working with the BRE, DGBC, but also GRESB on a sort of 2-degree metric. So they get insight in where their assets are now compared to the road to Paris proof. And that's something they really want to get insight in. And if you are on the way of Paris proof, then they will have to get their own capex reserved, or they have to talk with you and how to do it to improve it.
So from a risk perspective?
It's really from risk perspective, and the same with the fiscal risk, the topic before. It's the same how they look at it. Yeah.
So I have I would like to ask each one of you to if you were able to talk to the regulator or investors or the government today, and you had one wish, what would it be?
Well, the alignment of data and availability of data.
Yeah.
I would say set a target right now already, also for the future. I think that's very important, so that you can really start planning and you know what your risks are.
Yeah, and in addition to that, I would say to partner more with each other, really achieve the same goal.
Yeah, nice. All right, well, we leave it there.